Yesterday was pretty much an all-in rally. I mean, obviously, a lot of parts of the market were pretty depressed coming into it. 90% of all volume on the New York Stock Exchange to the upside. Brings me to about your word of the day, because I have a feeling it's not about, just throw a dart and buy whatever you hit.
It isn't. So my word of the day is selective. And so, we watched that rally yesterday, but when you think about how the S&P in particular 500 has performed since the start of the Fed tightening cycle, when you strip out those like seven high growth stocks, tech stocks, right? When you strip out tech, the S&P 500 since March 16th really has been down about 4%, right? And then with the median stock being down 5%. So kind of considering that and considering the fact that we're most likely at the end of the tightening cycle, we really believe there's some opportunities for outperformance, but you have to be selective.
Yeah, I know you mean from March of 2022 when the Fed started to tighten. Now,
oh, sorry, yeah.
Yeah, no.
2022, yes.
I got you. That was clear. Now, if the Fed, in fact, has finished tightening, as the market seems to be tentatively believing right now, as of July, typically from the end of the tightening cycle to the first cut, the S&P tends to be up like 10% or so. We're still down from that July high. I guess the point is there catch up to do, and in what types of stocks?
There is catch up to do, right? And so heading into holiday season, of course, like some of the names that some of the areas that we're looking at is retail, right? So retail, November and December for some companies tends to be really positive. And then also, I think it's also important to note with that CPI report releasing. Looking at gas prices, gas prices are 5% down, right? So remember, like gas is kind of like a tax to the consumer. So kind of heading into holiday season, we hope that they're going to get a little bit of relief. And so it's going to be interesting when that October retail sales report comes out to see if those lower gas prices made a bit of a difference in October, maybe a precursor for November and December.
Do want to get to your particular favorite stock in that area, because it's not one that really has been beaten down along with many other retailers.
It isn't, right? So what makes my holiday nice list today is Lulu, right? And so just by the way, what we're looking for kind of going forward in terms of just overall stock picks is a mix of quality growth, value stocks, strong balance sheets, higher margin companies, and really we very much pay attention to business models, right? And so Lulu announced just about a month and a half ago, their partnership with Peloton. It's going to drive their cost savings down. They're getting rid of the mirror. It also allows Lulu to kind of exit that content creation space, because they're going to be relying on Peloton to do a lot of that. And then they have a lot of cross-selling opportunities with Peloton's as Peloton's apparel partner, which is going to really kind of add some additional revenue. I've been waiting for this partnership for years. I think they should have done it a lot earlier. They should have not even gone into mirror territory. I'm not sure if it's going to be enough to kind of save Peloton, but I think it's going to do tons for Lulu for their bottom line. Also, they've got higher gross margins. Last quarter is about 58, almost 59% in Q2. Strong Q2 year-over-year growth, up 11%. Yeah. 52% international growth, and especially 61% growth in China.
Yeah, no, they've been